All right, all right, all right. How's everybody doing this morning, this afternoon? I always say morning. I think it's always morning. It's always morning to me. Good morning, good morning. At 1 o'clock in the afternoon, good morning. All right. We are excited today. We had a lot of news. Market's been going crazy. Oh my gosh. My portfolio. How are you guys' portfolios doing? Let's look at the S&P 500. Um, This is the March contract. And I guess we can't complain too much, right? I mean, we've had a little bit of a blow off here and it's recovering okay. So this is just the S&P 500 on a daily basis. So if we look back at the daily basis, we can see we got a nice little trend line that come in here. Just right up underneath that market, just like a train on rails. And of course, we got three nice big drives. Now they're kind of broken up in there, but that's kind of drive one, drive two, drive three in there. I don't know. You could really kind of call this a extra drive here, and it broke the lights there, so an extra drive there. But nonetheless, you can see overall it's kind of a basically 1, 2, 3 big drives up in there. We got this reversal up in here, which is the nice little 1, 2, 3 head and shoulders formation. Let's come in here and delete some of these. So we're going to come in and delete all arrows. Okay. So those are all gone. And now we're going to come in and look at our little ABC pattern. So the little ABC pattern is this little pattern here. This is very common. And we take this Fibonacci ruler from the low to the high, all the way up there. And generally speaking, we expect it to come down to that Fibonacci sweet spot right in there. And look at that. It came down, touched it just like a train on rails right at 38.2 and bounced off of it. It didn't go down into it like we would expect. So that's that delta cone of probability, right? So let's bring me down here so we can bring this up a little larger so you can see what's going on. How's that? A little better for you to see. And the way this is working is that thing came right down to 38.2. Now, for those of you who are aware, I know you are aware, I'm going to bring up that little chart, but there's some in here who are not aware. I'm going to bring this up. Oh, and while we're here, why don't I just go ahead and mention to you that the software I'm using is Track and Trade. You can go get a copy at trackandtrade.com. And we're using the live futures version today because we like to day trade. So when we day trade, we like to day trade in the futures market because there's no pattern day trading rules, right? So go get you that. You can open up your account with a small amount, $2,000 to $5,000, and trade to your heart's content. No pattern day trading rules. So that's the software we're using if you would like to have the software that we're using here. But the reason I am here is not to talk about track and trade. I want to come down and I want to show you the delta cone of probability. And I know it's in here somewhere. Let me see. Actually, I don't want to do it over here. I'm going to remove this. And I'm going to put this back up. And I'm going to pull it up over here. I'm going to go into here. It's a little easier for me to see it if I do it this way because I got these little thumbnails along the left-hand side. So this is the delta cone of probability right here. And you can see that there's, in the delta cone of probability, there are the one standard deviation, which is this delta cone right here, all right? And so this is where the market has a tendency to retrace to. If we come up to this other slide, you can see it says approximately 68.2% of the time, the market stays within that one standard cone of deviation. It likes to stay in there. The markets like to go sideways. And then when it leaves, it likes to come back. And so that around 95.4% of the time, it likes to go outside of that, or around 90 falls within 2 standard deviations, and then 99.7 to 3 standard deviations. So it's pretty rare for it to go all the way out to 3 standard deviations. Markets like to stay inside that single standard deviation. And so if you look at this, you can see that that looks like a Fibonacci ruler, doesn't it? There's also all kinds of tools that do this. If you come in and look, the Fibonacci ruler measures the extensions and levels of the Fibonacci of the delta cone of probability. Bollinger Bands is a tool that measures the delta cone of probability, and the RAF channel is also one. You got RSI and stochastics. They also do the delta cone of probability. So there's a lot of tools that are based around the delta cone of probability. And that's what we like to look at when we're looking at these markets. So we like to look at from a smaller point of view. So you'll go from the low of a small to a higher, see that? And the market likes to come back to that standard single one standard deviation. So right in there, you see it came back just like a train on rails right there. Boom, just like that. And then we come in with the next one. So we go from here up to this peak and pull it back. And once again, it came right down into that little, just kind of bouncing off the top of that cone right there. But that cone of probability is right there, 38.2, and it turned and rallied once again. So we measure it one more time. We go from here up to this one, and again, it pulled right back down into that delta cone of probability. And that's just kind of a real common thread among trading, 2 steps forward, 1 step back, 2 steps forward, 1 step back. That's how we measure it. And then we generally see that happen in a longer drive 3 times. So we'll see drive 1, drive 2, drive 3. All right, so that's called an Elliott wave pattern. And then we get this little upside down thing here, which is a little 1, 2, 3 top formation. Or if you go off this left shoulder up here, that'd be a head and shoulders formation is what we call that. All right, and that's how that all works together, combined one with another. And if you're not familiar with all this stuff, well, I'm teaching a class at the university for those of you who are local, and it's coming up in 2 weeks. It's called the day trading class, but primarily it's a technical analysis class where we learn about all of these different patterns and recurring patterns and all that kind of stuff. It's really fun. And if you guys can't make it, if you can't make it to the class at the university where I teach, you can buy the manual to the class, and the manual to the class is online at Amazon. You've heard of Amazon. Some of you guys have anyway. I know some of you have heard of the company called Amazon. So if you go to Amazon, you can pick up this book right here. If you scan that little code right there with your little phone, if you point your little cell phone at that thing, boom, it'll come up with a link. And your camera, got to be the camera, right? Point your little camera at that thing. Don't take a picture of it. Just hold it over there. It'll pop up with a link. You touch it and it'll open up, and then you can buy the manual. It's a 238 page workbook, 8.5 by 11 full color magazine. It's a book of all the technical analysis stuff. Again, it's the manual to the class. So if you're taking the class at the university, this book is included in the class at the university. So yeah, unless you want a paper version, I give you electronic version in class. So come and get the electronic version in class, or you can buy the paper version. Lots of people buy the paper version. They like paper anyway. So that will. Can you hear me now? 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 Can you hear me? Sound check. Can you hear me now? Yes, can hear you now. I wonder what that happened. Oh, okay. All right. Well, we're back. So sounds working. Sorry about that. I don't know what I did. I probably did something wrong. Probably my fault. But anyway, nonetheless, Fed Chair Powell spoke this morning, and he's not a real fan of Donald Trump. He's got a little TDS going, and Trump is and so after his speech, the market kind of tanked a little bit, and if Trump's floating the idea of replacing him. What'll that do for us? I don't know. Trump also floated the idea of sending old Doge over there, Elon Musk, to do a little house cleaning, check into the Fed chair, do a little audit over there, since they don't ever get audits because they're not really part of the federal government, right? Although they're, I don't know, they're, the weird thing that goes on with the Fed. But Trump thinks they ought to be audited, just like all the other services that are out there being audited and all this corruption that's being found. And so Fed's not very happy with Trump, as you can imagine. So we'll have to wait and see. Fed Bowman speaks at 1:30, and that's in about 20 minutes. Williams speaks at 1:30. Those guys both speaking at the same time. That's interesting. So we got a little bit of news going on. Now, you can see the market rebound a little bit, and it started to rally. We come in here and look at the 1-minute chart. So it kind of tanked this morning, see, after his speak, and then it's kind of rebounded back up. So not so bad, and kind of came back to where it was. So that's not so bad, with a little bit of trading going on there. And we're kind of going sideways here, going into the final minute of the S&P 500. We got 45 minutes till the market closes, and it's just been dead. So are we going to get anything out of this? We're going to get another nice little run going into the close, or are we going to get a flush? I don't know. If we put in the Fibonacci ruler and expect it to come back down to the, well, it came right back down and bounced off that 38.2 right there, that delta cone of probability, which is right there. It bounced off the 38.2 right there. I don't know. Is it going to come back down in there? That's probably where we'd expect it to go, is to come back down in here somewhere and then bounce and go at that point, or down to 61.8 and bounce. It has already bounced off of 31 and rallied a little bit. Is it going to stay up there and go again? We don't know. Nobody knows. Nobody knows. We got this high up in here. If we could break above this previous high up in here, we've also got this little channel in here. If it would break above that point right there, we could probably see some increase. We got a little green volume going in down here. You can see a little increasing green volume. That's a break right there. We could come in here and put an order on right there. Trade. Let's just snap one in there real quick just to see what happens. We'll see. This will jump over to the yellow dot if we can break it. Maybe getting in there just a tad bit early. I'm only in with one. Let's see if it'll add another one. Let's see if it wants to go here. Wants to break and rally. We'll drop. We got two stops in here right now. They're quite far back, but I'm dropping them. If that yellow dot will flip to the other side, those are two stops will jump up there. If we can get a flip, I'll put in a third. Come on, flip for us. It's bouncing off that 38.2 and trying to go up. We're getting a little increase in volume. Oh, look, volume's not increasing. Come on, buddy. Come on, baby Dow. Come on, baby. This isn't the Dow. This is the S&P. Come on, baby. There we go. So our stops jumped. We can come in here. We got our limits way up here. We can bring those down. We'll take a profit if it comes up here and tests that previous high. It might just, oh, look, 4 green bars. That usually we get flushed out on that. Not enough strength to go up. It's just going to come down and stop us out with a loss. That would suck. Yep, that's what it did. What a piece of, I won't swear. I don't want to go to YouTube confessional. So, well, that didn't work for us. All right, let's get back to our conversation here. So we'll have to wait and see what's going to happen here. We've had a pretty good little run here on the after Powell tanked the market. So we'll have to wait and see. This is the daily S&P. Let's go ahead, and that's the one we were talking about. So we're coming into a little triangle formation here, and that little thing didn't break out like we were looking for. This is the daily chart, and we got this one big bar came down here. That's kind of a crazy thing, but we're looking for this market to continue to rally up on here. This be a little ABC pattern to the upside. I'd like to see that. I got a lot of money in here riding on this thing to the upside, so I want to see this market rally and go, and there's no reason the market has to tank. I mean, a lot of people are saying the market has to tank, has to tank. They go and look at these long-term charts. We go look at a pull of a monthly chart like this. And we kind of covered this last time we looked at this. They're like, it's too extended. It can't go anymore. It can't go any higher. When the market, you think the market can't go any higher, that's when it goes higher. When you think the market can't go any lower, that's when it goes lower. But this is a Fibonacci bow tie, and it is, technically speaking, this thing should tie off that bow tie and come back like that. Now, does it have to? No, but it's just a common pattern. See this one here? Up there, back down to here, tied off that bow tie right in there, just like that. Now, if you come back and look a little bit further in time, you can see we did the same thing right in here. So we have another little, what we call a Fibonacci bow tie. Now, this one's not nearly as prominent, right? But it's here, here, all the way up to here, back down to here, and tied off that bow tie. So did we get one here? We even got one here, didn't we? So if we come in here, we go start here, here, up to here, and this one came back and woof, flushed way back down there, but nonetheless, it tied off that bow tie, and it just flushed a lot further. So that bow tie is a common pattern that we see over and over and over again, where markets have a tendency to rally. We can go back here and look at them too. So you have these peaks that you look off of, like this, and ties off, right? This. Now this one didn't go quite up there and ties off. This one, now if we go off this highest peak right in here before, not very big, I don't know, really kind of, but nonetheless, it kind of did that, just didn't come back, you know. So we didn't have this, we had kind of this gap in here, but it's still that same kind of pattern where you get that little 2 steps forward, 1 step back type of a pattern. So that's kind of what you're looking at. And that's where we're at. And that's why everybody's calling for this thing to come flushing. So when this blue light and that yellow light intercept, that's our big key ticker that thing's gonna, that's where it's gonna generally flush, right? So if it does that, we need that blue light and yellow light to come together. And then when it comes together, anticipate a flush. So we're getting ready up in here. Doesn't mean it can't keep going higher, and it doesn't mean those blue lights can't just keep on trucking up after there, but that's kind of what we're looking at. And that's why a lot of these analysts are doing this and saying the market's getting ready to flush, but it doesn't mean it has to. I mean, let's come in here and delete this. And it depends a lot on the fundamentals of the U.S. economy. And if you think the U.S. economy is in a bad situation, is going to flush, or if things are turning around and going to go up, that means that market could go up. We don't know how high. Right now, it's at 200, which is generally pretty darn high. That's actually right where, you know, that's your 100% here. So you go from here, and it's this line. Let's draw a line across there. This is the mathematical model. So if you take that line from the previous high, take your dollar calculator, and you go from here to here, that is 557 ticks. So if you take that same and move it up there, it's 557 ticks. So that's why everybody's calling for this thing to be a dump. All right. Doesn't mean it has to. 130.9 is actually another Fibonacci projection number. So if you come in here and project it this way, let's take this one off for a second. Let's get this out of the way. And we'll do the projection this way and see where it's at. If we go from this low to this high, back down to this low, the 130.9 is right there. And that's the golden ratio for the upside projections. So if you think about 61.8 is the golden ratio to the retracement side. Well, 130.9 is the golden ratio to the bullish upside. So there's, technically speaking, there's still some upside potential, but we are right now at 100%. And the reason I put 90% in there is because oftentimes the market doesn't like to do 100% of anything we expect it to do, which is 100% right there. And that's where it's at right now. So generally speaking, we try to get out and take our profits at 90%. And this thing's gone to 100, but 130.9 is the golden ratio. And we see it go to 160.8 up there as a 61.8 Fibonacci projection number. That's not uncalled for. And either is 200. We see it, markets do that. It doesn't mean it's going to go straight up there, just like whoop, like that. I mean, we generally get a few of these things, but there's nothing that says it can't go all the way up there to 200%. You know, I don't know. I like to try to be a little bit positive and say that we got some upside potential, but you know, all the naysayers are calling for this thing to come down, and the mathematical models are pointing that direction as well. If we come in here and turn on, so let's turn on the RSI here on the monthly chart. You can see we're way up here in the overbought region. So again, it's screaming that the market's going to fall. Does it have to? No. Doesn't have to. Doesn't have to do anything these mathematical models say they should. It's just that that's pretty typical. See, pretty common for these markets to flush when that type of an event occurs. You got this rally up here, you got this up here. And that's what we're seeing right up in here. It's just the timing is all set up for that thing to flush. And how far back down? Well, we'd expect it to come down at least to that Fibonacci bow tie, which is that previous high right there. That's why everybody's calling for the market to come back down to there. All right, so I thought I'd bring that to your attention very quick. Let's come back over here and see. Oh, see, we tried to get in on this break and it flushed. Came back down into the Fibonacci sweet spot here. Put that ruler back in there. And that Fibonacci sweet spot's right here. That's that delta cone of probability, right? Where the market has a tendency to come back down into the delta cone of probability. So we thought it might break right here. We gave it one shot right there to see if it wasn't going to take off and go up and break those highs, but it didn't do it. So we're waiting here. We got the yellow lines coming in here, yellow dots coming in here as we come down off of that peak right up in there. How far down is it going to come? Well, we expect it to come down into this Fibonacci sweet spot here somewhere. Nobody knows exactly where. Let's see, we'll send this to the back and then we'll bring that out. This is where we're going to come, down into here somewhere. That's what we're looking for. Let's go look at the other markets. This is a 1 minute chart on the S&P. Where's those daily charts? That's that monthly chart. Let's get rid of that one. This is the daily chart we drew all those drawings on. Let's get rid of that one, bring these things up. The Russell looks like it's trying to break right now, trying to go up a little bit higher. We could put one in on the Russell on a rally. Let's add one in there. Try to get a little Russell movement in there. There we go. Let's pop another one in there. Pop another one in there. See if we can't get a little movement on that Russell. It looks like the NASDAQ wants to go. Wants to follow the Russell. The S&P will probably be the slow. Look at the Dow. That thing's just dead. Looks like we got a false breakout on the Russell. We jumped in on that one with 3 contracts to see if it wasn't going to go. See if it won't move for us. Got 30 minutes till the bell rings. Doesn't look like anybody wants to trade right now. Maybe we'll wait till 10 minutes before the bell rings, and that's when the market will move. That's kind of how things have seemed to have been working lately. Let's wait and see. Down it's coming on the NASDAQ, so that's not good for the Russell. It'll probably have a little pullback and just where we got in, so we'll get whacked again. You don't try, you can't win. Things still coming down. This is only 2 times a charm. Sometimes we like 3 times a charm. This is break 1 attempt, break 2 attempt. That usually fails, and we get break 3 attempt, and it goes on the 3rd break. So we're kind of jumping the gun here. And these are all A1s too, and we know we don't like A1s. But this is also financial entertainment. We got to get some orders in here or else nobody's happy to come and watch us trade. So we got to get some money. Come on. Come on. You see that guy on TikTok. Come on. Come on, you rotten market. Don't stop us out again. We could take a short position up here on the Dow. It's getting ready to break lower. Throw one in there on the short side just to see if it's going to keep tumbling down. Look, we're all the way back to the 50% retracement on that S&P. Yeah, Lowdown Killer says that we got 2 Feds speaking right now. And of course, the Fed does not like the markets right now. They don't want to see the markets go up. They want to tank them because they think that they ain't letting their TDS show. They don't want Doge in there auditing them. They do not want that to happen. So they're going to pretend like they're neutral. Like, oh, it doesn't matter to us. But we all know the underlying tone is stay away from our books. What do you guys think of this Elon Musk thing going around looking at everybody's books, pulling down everybody's pants and looking at their underwear? Do you like that? Look at this. We're getting our heinies handed to us once again on this dumb Russell. It couldn't break higher and keep moving either. I always tell you, don't chase the A1s. This is an A1. This is an A1. Don't chase the A1s. There's lots of false A1 breakouts. You wait for it to go, and then get in on the B1. But we try the A1s here. Oh, we just got stopped out on the Dow. We're trying to take a short position on the Dow. This market's not doing anything. He's just going back and forth. Randy's saying, can you explain how to look at a chart and tell if we are within 1 or 2 standard deviations? That's kind of what we were just talking about with that probability, right? So what we're looking for is we're looking for a high and a low. And you can say, well, which high and low? Well, the most recent high and low. So this is obviously a high, right? And this is obviously a low. And so we would draw a Fibonacci ruler. And there's a lot of tools you can use to do this, but Fibonacci is the most common. And you draw it from the low to the high, just like that. And then what you do is you expect or anticipate that the market's going to come back down into the delta cone of probability, or the 1 standard deviation, which is right in that zone right there between 38.2 and 61.8. And that's how you kind of just read charts. And that's the simplest, easiest way to do it. And you can say, well, Lan, what about this little bump right here? Well, you can choose to come up here if you want. And then you can say, well, it's going to come back down into that standard deviation, which it did, right? I just extended it down here a little bit further because this is more of a low. This is a Wyckoff spring down here. So you see the market coming along, bouncing off of here, and then boom, comes down, fakes everybody out, and then takes off and goes to the moon. That's called a Wyckoff spring right there. But that's kind of how you read these charts. You just kind of look at the highs and lows and then draw your Fibonacci rulers in there. You can have big moves and you can have small moves. So like from here, from this top all the way down to here, but yet you had a couple little ABCs in there. So you can look at a high and low of a smaller time frame. So like from here to here, right? And this is going back. It goes both longs and shorts. So you can see from this point to this point, that's the A to the B, and then it retraced back into the delta cone of probability between 61.8 and 38.2. And that's kind of where you expect the market to go back into. That's that 1 standard deviation. So the market likes to go down and then back to the standard deviation, go down, back to the standard deviation, and kind of wanders around through that delta cone of probability. And that's why I'm always looking at that, because that's kind of where we can anticipate or look for markets to go. And so if we say, well, there's a low right there, there's one right there, and then there's a high right here, here's a high right here, let's kind of put our little Fibonacci ruler in there, our delta cone of probability tool, we draw it up there, and we project out into the future. Where's the market going to come back down to? Well, down to between 38.2 and 61.8. So it's going to come back into that region there. And so that ends up being your A, B, C, or your delta cone of probability. If you think about it from the point of view of that chart that I pulled up, where is it? Let's see, right here. This little graph right here. I mean, if you look at it from that little graph's point of view, you would think of that little graph. Let me draw it in here. It'd be like this, right? It'd be coming down, and then that's the little graph. So this is your delta cone of probability. This is your standard deviation right here. And so that's why we look at this low, this high, from here to here to here. And it just repeats over and over and over again. It's just 2 steps forward, 1 step back, 2 steps forward, 1 step back. Generally speaking, when it gets down into that delta cone of probability, if the market's in an uptrend, it'll reverse and turn, and that's what we anticipate, breaking and continuing the uptrend. Doesn't mean it can't keep going down, certainly can, and that's what we're seeing right now. But that's generally where we'll look for that market to turn around and come back up. So it's coming down. We got another number right here. This is a Fibonacci number 78.6, which is also another area of support down here off of this Fibonacci ruler. So, markets will sometimes come down to there. Then that would give you that, what we call the Wyckoff spring. So if you have that break right here at 61.8, this is your support level. The market breaks down, says, I'm going to fake you out, come down to 78.6, give you that Wyckoff spring, and then turn and go out from there. So that kind of fakes everybody out, makes them think that the market's not going to go up. and it comes down, everybody jumps out right there. All the big players buy all of your positions right there because you jump out because it broke below the 61.8, giving you the impression that it's going to continue down. Everybody gets out only to have the market turn and rally. So that's kind of a way that the market moves too. So here we go right here. If we wanted to, we could buy right there in anticipation of that Wyckoff spring paying off for us. And we'll see. Never know. It might just turn around and keep flushing down, but that's kind of how that pattern works out for us. Let's see if it works this time. And we'll just hold that right there for a minute and see what happens. Maybe we put one in here. Comes up and tests this high right up here. We could take some profits. Take some more profits up here if it tests that high. So we put our profit taking tools up in there. Now this is the micro mini. So we're over here trading the micro mini, but that's okay. We're up $13 because we're trading the little tiny one. So if you want to just trade the little tiny one, you can trade the little tiny one. It's not nearly as much money. This is called a micro, as opposed to these others that we were trading, which, oh my goodness, look, we're sitting here watching this one while these other markets are taking off, going on the third time's a charm. So there, that one's going. Let's see if this Wyckoff spring down here on the micro NASDAQ won't pay off. It won't give us the money that we're looking for to cover our losses, but you know, it's more about being right than it is about making money sometimes. We'll just see how we're doing here. See that? There's our third time's a charm, and it's taken off on the third try. So there's try one, there's try two, and it failed. There's try three, and up it goes. All right, let's see if this will give us a B1 now. So that's going to be an A1 right there, the third one in a row, I think. And then we'll see if this will rally, give us a little pullback, give us an opportunity to get in on the next run. So come on, buddy, give us a little pullback. Well, that NASDAQ's losing its strength. Rotten dog, that thing flushed too. So the NASDAQ failed on us. It didn't keep going up on that. Let's see if it'll try one more time. Low down killer. I wish I was on the micro. I just got my hiney handed to me. Sorry about that, dude. I shouldn't laugh. That's not nice. But I wasn't laughing at your loss. I was laughing at your comment. All right, come on. Now we're going to get a little break right here. See if it'll break those yellow dots, come down, touch the blue dots, and that'll be a good place to get in for the next rally up. Let's see if it's going to take off and go to the moon. Just getting a little pattern in here too. That's a little, see right in here? That's pulling back against that first rally. So that's drive one, drive two. That just be the, let's see, we'll watch it. Okay, I want to go long here. I want to go long in here. I want to get in right here. ATR trail. I don't want to trail the ATR. Scalp. I don't want scalp. I don't have my tool set up properly to do what I want here. That one. I want to trail one price bar back. I think that's what I want. Trail one price bar back, stop trail. That's a limit 5. I don't want that one either. Trail. I got so many. I got so many. I got so many strategies in here. I can't keep them all straight. I think this is what I want. Yeah, we'll do that one. So that'll catch a reversal to the upside. It'll just trail down on those flat tops. And as soon as we get the first candle to break a new high, it'll get in. Boy, this market, not having any luck today. Delete all drawing tools. That's just chop, chop, chop. Okay, I guess the Dow is the one that seems to be moving the best for us right now. We could put the same one in here. One candle, just going in with singles. This one's moving pretty good. If it'll go back up, we'll drop a 2 on there. Maybe we'll even drop a third one in there. But we need it to move for us. I'm not sure the Russell's playing nice. Look at that NASDAQ flushing. What did those boys say? Lowdown Killer wants a Cybertruck. I don't know. I love Elon, and I like a couple of his cars. I like his Model Y. Is it the Y? The most recent one? Is that the Model Y that he just released? I'd like one of those. But I'm not fond of his Cybertruck. I think they're kind of funny looking. And I don't know. I'm not a real fan. Not a real fan of his Cybertruck. Sure see a lot of them driving around here in the town I live in, St. George. I'm here in St. George. I see a bunch of them. There's a green one. Somebody painted theirs green, and they're riding around. The green one here in town. Okay, is that going to get ready to hit on the Russell? That's just a single on the Russell. We could put a second one on the Russell. Oh, that's the wrong market. We'll put a second one on the Russell. Oh, I missed it. Too slow. Doggone it. It's too slow on the uptake. We'll just grab it just like that. See if that doesn't. Look at that. Fake this out. Too weak. Not enough strength to even go. Not even enough strength to move it. First candle to break a new high, and it couldn't even go. Couldn't even go high enough to get a stop moved up. Rotten, lousy Russell. Rotten, lousy Russell. Cousin Russell down there. Now Santa wants to go short. Do we want to take a short position on Mr. Russell? Put a couple on there. Boy, we're just following the Dow. It ain't turning around and going back up at all, is it? We're just flushing right back down to where it started. So he did that thing. You can tell by watching the markets what those Fed guys are saying. Oh, we love everything. Oh, everything's so great. Oh, it's a wonderful, wonderful market. Oh, by the way, we hate everybody and everything sucks. And so then the market flushes. That's what they do because they're politicians. Everything's great. Oh, but everything's bad. Oh, everything's great. Oh, everything's bad. There's two of them speaking at the same time. So they're probably doing a little double speak. One saying, oh, everything's great. The other one saying, oh, everything's bad. Well, catching the everything's bad part right here on the Russell. They're trying to catch the reversal and the everything's good part on the Dow. But man, look at that. Flat bottom, flat tops all the way down. All the way down. Holy cow. We got it set in here to take the reversal. There's the reversal, but I don't know if it's going to go straight up now. I think it'll go turn and go straight up. Probably come up. 3 bars and come back down and stop us out. That's pretty common. Well, now the Russell's just going to go all the way back up and stop us out. If it hits that break even, we'll just take it off because I don't want to lose any more. Stop hasn't even gotten to break even yet. The market's dead. Slow moving market. The Dow got our stop to break even. Well, that's good. Let's move some of these limits out of here. put those out there for now. We'll take one off right here if it'll touch it. So we're short the Russell. We're long the Dow, but now we're out the Dow. We're going to drop in 3 more here for the Dow to the long side. First candle break a new high. We're going to try it one more time, see if we can get an ABC bottom formation. But in the meantime, we'll take the Russell short. We're not having a good month in our trading. This is not a good month. We're in a drawdown on our portfolios, and we're not making any money on the trading side either. Starting out pretty rough. That Dow just still flushing. Well, we got our stop to break even on the Russell. See how far down we got that limit order. Way down here. Let's come up here and take some profits if this thing will give them to us. It's going to go back. Is it going to stop us out on that Russell? Oh my goodness. We can't get nothing going on that Dow up there. That's the second attempt to go long, and it stopped us out again. Well, we've hit our max loss for the day. What's our max loss? What is our max loss? I think our max loss on this thing is, yep, our max loss is $500. That's all we can lose. We list 2,000 on our options. We were cleaning out some of our option strategy. We'll see that tomorrow when we're looking in the morning. That was options, stock options. We got our hiney handed to us there. I didn't have my hedges on, so I got in trouble. Wasn't paying enough attention to our classroom portfolio. And I didn't put any hedges on. That was our other day. We had in January, we ended up with $3,000. Had a couple bad moves in here. At least we had $3,000 over there. We're down $1,900 right now. Now we're down again. We just broke our max loss. Do you guys have your spreadsheets? Did you get your spreadsheets? You can get these spreadsheets. This is my January. This is my February spreadsheet. Last year's spreadsheets, we started all fresh and new. So we got the cash cow portfolio. I got that all updated for you guys who, if you want to take the new one. Thing is, you might have a whole bunch of numbers in yours already and you don't want to. Well, we had to fix that bug in the annualized yield. This annual income had a bug in it right here. It was doing a calculation off of the R. It's supposed to do the calculation off the S. And if you want to take a look at that, I recorded that update yesterday in the yesterday's video. You can go watch that, but you can just fix that right there. It's supposed to be S, not R. So right up here, see that? So it says S. That's supposed to be S, not R. And on your portfolio, if you're using this cash cow portfolio, make sure you change that. Plus, I went and created all these tables. So now that's correct too. So we have our UBI, which is actually our dividends. I call it UBI, Universal Basic Income, instead of dividends. And then this is your seed money. So this is anytime you put money into the account, you put it down here. And then these, and actually that has to be taken off because anything that's green, you have to put the numbers in. But if it's not green, no color. So those are all formulas now. So you see those pull, investment seed money. I got to fix that. The seed money is supposed to be pulling from, that's not supposed to be like that. 50,000. And then what is that one? That's YMAG. It's supposed to be, oh, but we don't have our YMAG seed money in there. Oh, that's UBI, seed money, YMAG. Look, we put more money in there and it still says 50,000. So I've made that mistake. Wait a second. Those look like, oh, I've still got errors in here. 1/1/25, 50,000, 1/1. This is supposed to be 1/1 right here. Ugh, guys, I'm still finding bugs in our spreadsheet, and that's 50,000. And then these are all gone because those are repeats of those are. So now this is 50,000, supposed to be right here. So that's equals this right here. There we go. And then this one here, same thing. This is Tesla. So if we come and look at Tesla, it's right here, 50,000. Oh, so that one's correct. But we put, why does it say 55,000? Did we put more money into Tesla? No, it's still 50,000. So this is supposed to be equals Tesla seed money 50,000. But for some reason it's saying, and we're going to go auto sum 50,000. There, that fixed that one. In Misty, so we got MSFO. So we got some there and seed in MSFO. We put 499.07 in there on 1/17. So this is 1/17/2025 at 499.07. I think I'm doing this right. So that is a sum of there, and then this equals this. And the thing is we got that from right here. So that MSFO is actually, oh, wait a second. That's seed, 499. Oh yeah, that's right. And then we got 1018. So we got the 1018 right there. So that's correct. And then this is 56 on MSTY. MSTY, yeah, 5631, 311. And that's right, E53. E53, which is that one there. And this one here is E36, which is right there, E36. Sounds like I'm playing Battleship. E36. All right, and these are all supposed to be formulas too, and they are. They're all right. Okay, so I just had a couple of them that weren't right. So I'll have to update that spreadsheet again. All right, so that's our cash cow portfolio. And it had a bug over here. I fixed that one. So now I've just updated this and fixed that one. And plus I added all these things in here. So that's all better. So we're getting there. I need to work on the cash thing. If we take money out and go spend it, we got to account for that somewhere. I mean, we should at least track that. Right now it's not tracking that. And then we have the cash cow model. So this is the model, and I think the model's correct. It's got all this is all set up as formulas. So this is the one you're going to actually use. This is the one that you'd actually take money and use yourself. And it's all correct. I fixed all that one. But this is the one for our own class, and I just fixed that one. So it's all good now. And then this is the old legacy one, if you want to use the old legacy one that we were using before. But this, the logic's wrong. So this is traditional logic. This is the way you would normally think about investing. The cash cow model is totally changes your whole, and then this is your UBI calculator. So you can just look them up and put stuff in there. This is like just to do your math. And then this is your traditional dividends. So you can see all these traditional dividends, and these are the yields they provide. And then if we come over here, this is the yield max list, and you can see the dividend yields that they provide. The lowest one in here is PLTR at 61. Oh no, there's a 19, 18. There's the lowest one right there. Those are out of order. So JP Morgan Chase is a 18% return on your investment annualized. That's pretty good money. But if you go back over to the traditional, the very best one is Verizon at 6.7. So the yield max funds are kicking it. All right. And they got their highest one over here, which is ARC, AIYY symbol at 126. Wow. That's Snow and that's Tesla. Tesla is the second at 122. I think that needs to be updated though. I think they've gone down to 100. They're not that high. Anyway, that's another. And then there's your income estimator. So all these spreadsheets are free to you. If you want them, all you have to do is go subscribe to Pitt News Magazine, which is $20 for a whole year, and you get all these spreadsheets. All right. So this is the one we're working on today. So we've lost $500. Let's go back over and look at the market. It's not closed yet. We got 10 minutes to go, Land. See if we can make $500 in 10 minutes. We're breaking. I don't think we're going to get any action out of this thing, but we can try. It's breaking to the upside. So I put 3 contracts on. Come on, baby. Rock and roll for us. Got green volume. We're breaking the yellow dots, breaking the blue dots. Come on, rock and roll. Come on. Is it just going to wander back down and stop us out again? It's not doing anything at all. Totally dead. Totally dead. And it just stopped us out. Now we're lost at $700. Take it short, Land. Take it short. Well, you're just going to get your ass handed to you. Sitting here, go back and forth on a market that's got no strength. I watch it flush like a rock. Just as I say that. Do it, Land. Do it. Take it short. I know you want to. Put a short in there. Get in there. Fight, win. You're just going to dig yourself deeper and deeper in a hole. Now it's going to roll and go back up and stop us out again. It ain't going to go anywhere, guys. It's dead. The Fed boys killed it today. Took all the steam right out of it. Everybody's walking away. 5 minutes till the bell rings. This thing ain't gonna go nowhere. Stopped again. Now we doubled our losses. Get in there, Land. Put it in again. If I do that, you guys are gonna. Stupid market. That's why you have a max loss set. Don't go past it. Good lesson what not to do, I guess. The market's dead. It ain't got no strength. You can't trade a market that's dead. Just kill you. How do you know it's dead? Because it's not going anywhere. What if it starts going somewhere? Well, that's what you wait for. You wait for it to move first. And then once it starts to move, and then you get a little pullback, then you can try and take the next leg and see if it's going to go again. But to just take all these little snaky things, that's not going to do you any good. Not going to do you any good at all. Look at this. We're getting flushed out already again, going the wrong direction. It doesn't matter. It's not going to make you any money at all. The market's dead. All right. What you gonna do? What you gonna do? Sit here and drive yourself into the ground. At least we're doing it here, not in your real money accounts. Lowdown says he's doing the same thing, chasing the market, trying to get it back to break even. Yep, that's the quickest and fastest way to lose all your money. It's just dead. It's not going anywhere. Nothing's moving. All right, guys, that's it. We're closing this baby out. I got a Sunday school lesson for you. Volatility is your friend. Short-term day traders and their scalpers love volatility, which is something we didn't have today. Volatility is what moves the markets. News, weather, government reports, earnings, interest rates, and technical traders. No volatility, no trend. No trend, no trade. Why are we still trading? Because it was a demo account and we knew better, but we wanted to do it anyway, right? Because we're here in the class. But you guys don't do this. Don't do what we did today, which is sit there and go in and out, in and out, in and out on every little break. Wait for the market to actually make a big move. And then you get a little pullback and you can try that next leg and see if it's going to go one more time. But don't sit there and try and take every little snaky thing. We talked about that last time, right? When we do the snaky, we talked about the snaky Sunday school lesson. Why markets move through snakes. Don't we have that one in here? Don't. What causes snaky markets? I can't find the Sunday school lesson for you. Why do markets snake like that? Can't see it. Can't find it. Oh, well, we'll cover that one again. We just covered that one the other day. But no volatility. We didn't have any volatility today. Oh, there it is right there. Markets move in waves. Why? 90% of traders buy, sell on a break above a previous high or low. Once the initial push of all the buyers subsides, the scalpers liquidate their positions, causing the market to fall or rise. It pulls back and takes out all the stops that were moved to break even, then pushes higher and lower once again. This is what causes snaky markets. And that's what we've been getting today. We just got a lousy, snaky market. Look at that thing. Back and forth. Snaky market. So that's your snaky market right there. Look at that thing. It's a rip your wheels off market. Not doing a damn thing for us. Same thing down here on range bar. All right, that's it. That's all I got for you. We'll go put that into our spreadsheet. $1,700 down today. Should have stopped at the 500. Oh, well. All right, guys, we will catch you on tomorrow morning. We're going to be looking at the passive trading portfolio, see if we can't make a little money in options. We got to get our portfolio on options going and start seeing if we can't make some money over there, get ourselves back out of the hole here we dug ourselves into. So if you like this, like, share, and subscribe. It always helps out. Lets me know I'm on the right track. We didn't do the right thing today, but it was a good lesson on what not to do. And those are not such bad lessons. Okay, guys. We will see you tomorrow morning, bright and early, 8 a.m. Mountain Standard Time.